Good morning, I'm Clinton Griffiths. The corn and soybean export pace has been robust the last few weeks. It is due in part to grain prices being at value levels for end users. However, could it also be tied to the upcoming election? Ag Day's Michelle Rook joins us. And Michelle, is this latest export activity tied to politics?
Well, it might be part of the reason. If elected, former President Trump has said his administration will renegotiate USMCA and raise tariffs, which could cause a possible trade war with China. Market analysts tell me this has caused speculative traders to sit on the sidelines and export customers to run to the market to book product just in case. Corn and soybean export sales usually pick up around harvest, but this fall's business has been above normal. Corn exports hit 142 million bushels last week, the largest since 2021 and the fifth highest week in 25 years. Soybean exports were also a marketing year high at 79 million bushels, and total commitments are now 8% above last year. Market analysts say prices are attractive, but the uncertainty about the elections is playing a role.
It makes some sense that if you're going to have some kind of a tariff fight, that you want to front load your imports.
For the Trump campaign, tariffs seem like more than just talk.
Really criticized the idea of using tariffs. President Trump has said, rightfully in my view, obviously I'm a little biased, but that unless you're willing to use tariffs to go after countries that are manipulating our own markets, whether it's food, energy, or manufactured goods, you're going to be giving up on American productive workers. We can't do that. We've got to protect our farms, protect our manufacturers, make more of our own stuff, grow more of our own food, and that's fundamentally the President Trump approach to these things.
China's heeding the warning. While they've bought very little U.S. corn, they've secured over 386 million bushels of soybeans so far this fall, but all for delivery before January.
Certainly, I think you have to look at a Trump victory as a potential for a trade war with China, good or bad, depending on how that outcome comes longer term. But certainly in the near term, that could have the markets on a little bit of the defensive here.
Brugler says one lesson from the trade war in 2018 is that China can't go without U.S. soybeans.
The global S&Ds just won't allow them to go 100% South American. There's always dislocation. I've argued that, it's not the end of the world to have a China shut you off on beans, because ultimately you just shift those bean exports to countries that were buying Brazilian or Argentine and now have to buy U.S.
And so he thinks the market is overreacting to the potential for a trade war and higher tariffs.
A tariff is a tax. It can be paid by the buyer or it can be paid by the seller. And what I mean there is, if the Chinese economy is weak enough, they may accept the lower selling price on things that have a tariff on them in order to get the volumes to move and keep unemployment.
In contrast, if Kamala Harris is elected president, he looks for little change in trade policy and existing tariffs to stay in place. I'm Michelle Rook reporting for Ag Day.